So I'm going to break this video into several parts. First, we will learn about investing. Second, what is stock market investing in particular? And then what are the key concepts you need to understand when it comes to investing? Next, we will talk about what are the safe ways to invest in a stock market. Fifth, we will talk about what is the difference between investing and gambling. And lastly, I will show you how you can invest in an ETF through Vanguard. If you are new to this channel, hi, my name is Parul. I'm an economist by profession. I have a master's in economics from USC, LA, and a bachelor's with honors in economics from SRCC University of Delhi, India, which is the prime institute for economic and finance education in India. And I have also worked in various litigation consulting firms doing complex financial analysis for many years. So I do have a lot of experience, knowledge, and expertise to talk about finance and economic related topics. I hope you find value in this video. So without any further ado, let's get started. So, what is investing? Investing is the means to grow your money and build wealth by putting it either in the stock market, fixed income, and physical assets like real estate and commodities. Anyone looking to grow their wealth and secure their financial future or save for specific goals should consider investing. There isn't a magical age as to the time when you should start investing, but the earlier you start, the more advantage you will reap. Before you start investing, it is very important to have at least 3 to 6 months of money saved in a high yield savings account. In case of any emergency, like if you lose your job or something, you should have a cushion to cover that many months of fixed expenses until you find a new job. So, savings in that case is the only secure way to have access to money. Also, investing is done to grow your wealth for the long term, and it is not something where you can withdraw your money quickly if you need it urgently or within a shorter duration of time. So if you have an emergency fund and you have paid off your high interest debt, only then you should begin your investing journey. So having this background is very important, and now I will explain to you what is stock market investing. So at its core, it is owning a tiny piece of company. When you buy a stock, you become a shareholder or stockholder and you start sharing the company's profits and losses. There are different ways to invest in a stock market. You can buy individual stocks of a company, or you can buy mutual funds or ETFs, which are exchange traded funds. We will cover all of those in detail later in the video. Now I want to say that S&P 500, which is the overall indicator of the US stock market, has given an annual return of around 8 to 10% on an average yearly, which is very high compared to what you will get if you put your money in a savings account, which is a traditional savings account like Bank of America, Chase, or Citibank. They only provide you 0.01% annual APY. If you invest in a diversified overall US stock market, you can get a net return of 8% because the inflation rate in America over a period of history has been around 2%. The average inflation rate, I meant, not because obviously every year it is going to be different, because this is where the US government is targeting the inflation rate around 2%. I'm using the term average because stock market also doesn't give you the same return every year, and there are many factors that contribute to market volatility. I made a separate video on that here, so you can check it out to see which factors affect stock market. So 10% return in stock market is an average number based on the data that we have over the period of history. So now let's look at what are the two most important concepts that you need to understand when it comes to investing. First is that you need to understand the difference between time in the market versus timing the market. And the second important concept is diversification. So now the question arises, which company should I invest in? There are companies like Tesla, Apple, Amazon that have done really well. And there are companies like Zoom, for example, which grew a lot 3 years ago due to the COVID pandemic, but now is back to its original price where it almost started. This is why you should not be investing in individual stocks, because it is almost impossible to predict how the company is going to perform in future and whether its share price will rise or fall. You may be lucky with Apple right now if you bought its share like some years ago, but you may also fail. This brings me to the fourth section, which is what are the safe ways to invest in the stock market? Now, instead of picking individual stocks, what I do is I always go for an index fund or ETF. So, this way, I have a diversified portfolio because I am investing in S&P 500 based ETFs and index fund. So pretty much my portfolio is tracking the entire US economy, because S&P 500 comprises of the top 500 US companies based on the market cap. So if I'm investing a little bit in those, this is pretty much like investing in the US economy. In fact, this strategy of investing in index fund or ETF is also suggested by big seasoned investors such as Warren Buffett. So yes, the best way to invest your money in a stock market is through a broad-based index fund or ETF. They are very similar to each other than the fact that in ETF you can invest as low as $10, whereas for index fund investing, there is usually a minimum amount that you need to start investing. Now, the advantage of investing in an index fund or ETF is they give you the diversification. After all, there are pool of many companies. So for instance, S&P 500 ETF will track the S&P 500 companies in the United States. So when you buy the ETF, you basically own a small share of all those 500 companies. So if one or the few companies do not do well, there are still many others. So you should be okay. Another safe way to invest in stock market is through a concept called dollar cost averaging, where you put in a fixed amount of money every period, whether it's a weekly, monthly, or whenever. You don't think too much about the market movements, whether it's going up and down. You just keep investing that amount every period, and this way you will mitigate the market fluctuations. And this is a very researched and proven way to grow your wealth over time, and it gives you a lot of peace of mind because you're not really worrying about how the market is doing. You're only trying to achieve your financial goals. By the way, if you're finding value in this video, please don't forget to hit the like button. It's free and it helps us small creators grow and give us the motivation to keep creating good content. Now let's move on to the next topic, which is what is the difference between investing and gambling? In gambling, you are trying to speculate which companies you should invest in, and you are trying to time the market. But investing is done for the long term, where you don't get rich quickly, but you have more peace in mind, and there is almost a guarantee of making good returns over the long term. Yes, it does take patience, which is very hard for many people, and people want to get rich quick. But based on the history, if you leave your money invested in a broad based ETF or index fund for, let's say, 15 to 20 years, you will see some really good returns. One way to look at it is that Warren Buffett, who is the biggest investor of all, has his net worth mainly growing after his 50th birthday. If you look at this chart, you'll see how the compound interest made his net worth grow exponentially towards the end, because compound interest means you are getting interest on interest. So when you're doing compounding on a bigger number, it tends to grow exponentially. Now, let me walk you through the step-by-step process of investing using Vanguard app. First, let's download the app from your device's app store and install it. Then you're going to create an account by providing the necessary personal information and setting up a secure password. After your account is set up, link your bank account to the app for easy fund transfers. Once your bank account is linked, you can start exploring investment options within the app. Now, each investment option will have its own risk, returns, and requirements, so take your time to understand them. Decide how much you want to invest and select the investment option that aligns with your goals and risk tolerance. Now, carefully review and double check your investment choices before finalizing any transactions. Once you're ready, input the investment amount and follow the prompts to complete the purchase. Don't forget to monitor your investments regularly to stay informed about their performance and make adjustments if necessary. Take advantage of any educational resources or tools that the app provides to enhance your investment knowledge. Remember that investing involves risks and past performance is not always indicative of future results. If you're a beginner investor and you're not very comfortable in choosing a right fund, there's one option that I can suggest, and it's called Robo Advisor. These are relatively low cost. For example, on the Vanguard website, if you invest $1,000 every month or 12,000 a year, you only pay $24 as fee, which is really low compared to other mutual funds fees where that fees can take a lot of your money if your investment grows. At the end of the video, I want to say that you should consider investing for the long term as it allows you to ride out short-term market fluctuations. Keep track of your investment portfolio's progress and make necessary changes as your goals and circumstances change. You can always revisit your investment plan periodically to ensure it still aligns with your financial objective based on your age. Remember that investing is a journey and it's essential to have patience, discipline, and a long term mindset. I hope you found value in this video. If you like my content, please don't forget to hit the like button and turn on the notification bell and subscribe to my channel so that you don't miss on any future videos. I'll see you in my next one. Take care. Bye.